Hello, everybody. Welcome in. Today is a spicy one with some very, very hard questions, which brings about some very hard truths. So buckle in, and this one may not be for the faint of heart, but these are important things for you all to know. We're going to look at my schedule and why it is that way. We're going to look at Bitcoin, what to do with Wholecoinership. We're going to talk about the prediction for the next 3 years, what's going to happen to the world, and how should we prepare. We'll look at some pharma, biotech companies that I've never looked at before, and we'll look at some historical performance and break down some core investing rules. I think that's everything. Also, we have a bit of a sad situation too. Yeah, thank you. We're in my leering center. You guys are great. I love this. I love humor as well. Humor is very important, everybody, to get through life. Life is dark. Life can be very bad. But if you can have fun and laugh things off, there's nothing more important. So thank you, Leisure Real Estate, for reminding us. And yes, I got a very thick skin, so bring on the jokes. Let's talk about this video. Bitcoin, should we say farewell or not? Of course, you probably know the answer. Anywho, let's get in. Not financial advice. And all the questions come from Patreon. After that 60-second introduction, this is from the Muppets. Hi, James. Would you give up Wholecoinership in favor of a heavier percentage portfolio in AI? In your last Q&A video, you shared your portfolio allocations, about 30% crypto and 66% AI. I'm currently 86% crypto and 14% AI. For me, in order to change this, I would need to give up Bitcoin Wholecoinership. Would you do so? So I don't tell people what to do, but I do share data and information. And as you know, I share a ton of information on Patreon every single day. In fact, we'll get to that at the very end of the video of how many posts, but this is important. So, and I'm going to spend some time on it because I don't want things to be misconstrued. And we know Bitcoin is weak today. We know Bitcoin sucked last year. And we know other things have run and there's big rotations happening. But from a returns perspective, this is where it gets kind of tricky. You know, keeping a whole coin will be important one day, but it may not be financially optimal. And I'm going to show you some charts in a minute that break all that down. We've had, since 2020, AI leaders have done very well. We'll look at some CAGRs. The Bitcoin CAGR can be pretty good. Whole coin gives you prestige, but if you're looking for real alpha, yeah, I think you're barking sort of up the right tree. Let's look at some of these returns for a couple of assets. And I hope I can read these numbers, and I'm going to blow this up so I can make sure I don't get them wrong. This is basically since 2020, Bitcoin versus NVIDIA, Tesla, Google. Google, the laggard, 419% since 2020. Bitcoin up 865% since 2020, which is a fantastic result, my friends. But there are faster horses. Tesla up over 2,100%. You got people saying, oh, Tesla's dead money. Well, if you nail tops and don't buy the crazy dips, over a certain time series, yes, it could be. For example, if you look at the price of Tesla a year ago to today, it's only like 5% higher. But if you bought at $200, you've made 150%. That's kind of the way to think about it. So trading the market. And NVIDIA since 2020 up 3,600%. But there's more. Let's look at Solana versus these assets. Solana up 14,000%. Of course, you'd have to be in early, or you can also buy the dip. If you look, remember November 2022, $8. You know, it's important. The big message here, when you look at these charts, don't buy tops, buy dips. That's why one of my key investing rules is do not chase, replace. I don't chase stuff. Very important. Now, let's look at gold versus Bitcoin. This has broken a lot of people's heads. If you look at gold versus Bitcoin, it has beaten Bitcoin by 11.3% over the last 5 years. A lot of people are very upset. It's like, why didn't I buy gold? What's with this Bitcoin stuff? And it's hard, but you know, if you had bought Bitcoin and sold it at the top, or at the bottom or whenever. And that's the beauty of trading and pair trading and rotations, is nothing is straight. You get these huge fluctuations up and down. And that's why rotations and pair trading are very important. Now let's get into the final thing. I can tell you what to do. You're very heavily concentrated in Bitcoin. You know my exact Bitcoin concentration. You are 11 times that in terms of allocation. I always say allocations matter. But what does give me a lot of hope, not sharing hopium here, but Bitcoin price with the market cap of gold would be $1.7 million. The market cap of gold is about to hit 35 trillion. Bitcoin's around 1.7. So it is absolutely crazy. And we know, that's 19.5 times the market cap. And we know that Bitcoin is better gold. But we also know fiat is going to zero. And we know Bitcoin is our fiat insurance as it goes to zero. But it's just not having its day yet. But like we saw with silver and other precious metals, Bitcoin should eventually have its day, but right now it's still a risk-on asset. And we are going into a very volatile, tumultuous week next week. So buckle in, my friends, with seatbelts. Beware. There could be some good dip buying opportunity, which will take us to another story we'll talk about. Let me see. Digits. Once we do well with our investments and or there are abundance of goods, can we vote with our feet and move anywhere in the world? What are the top 10 destinations you predict will be the most popular destinations? Well, we've been digging into this for 5 years, my friends. This is something that I've planned. It's going to be my last big product development build, hopefully of my life, because it takes a lot of blood, sweat, and tears to put this stuff out. But this one is so important. And in fact, it's never been more important as we get Orwellian stuff happening all around the world. We have the Netherlands planning to tax unrealized capital gains in 2028, allegedly. That would destroy your investing future. It will destroy your retirement planning. It's just disastrous. And there will come a time where, yes, people are already voting with their feet. So we are going to be coming out with our 2026 retirement compendium. First time ever. It will cover 150 countries across over 40 parameters. And you get to judge what you want. Do you want proximity to a beach? Do you want to be able to ski in the winter? Do you need good medical hospitals? Do you need, certain types of religions to be in place? Or zero tax? Or a crypto-friendly environment? Yada, yada. Cheap real estate, expensive real estate, security, safety, all the cost of living. It'll have everything in there. And you will be able to, with little sliders, play and identify what is optimal for you. You're going to get a custom, bespoke, tailored menu of what your top 10 places look like, because everybody is different. People place certain values on certain things, like safety first, medical care second, or it could be cost of living and surfing. They're the top two things. Everybody's a scuba diving, windsurfing. Anyway, we'll see. That's coming. And big meeting on that on Monday, actually, with the development team. So buckle in, stay tuned. Next, Freedom 55. My dad just had a triple bypass surgery, has sticky pneumonia, is intubated on a breathing machine, ventilator, been in and out of the ICU with a long recovery ahead. I'm 48, live in Taiwan, and considering mortgaging my paid-off apartment at 2.3% to invest in STRC for passive income to cover his medical bills. What would your advice be on this? So first of all, I am very sorry to hear about your father. I pray he recovers soon, and I know he will, because everybody will give him good juju here in this community. This is so important as well. A couple of things before we jump in. I always stress, never borrow to speculate, because then you might find yourself in a big debt hole if you lose speculating. But this is not speculating. This is, as I say here, borrowing to invest in a home equity line of credit for medical expenses, borrowing from a home equity line of credit to invest. And it's a life or death situation. So yeah, the math is simple. Yeah, borrow. And in fact, my math is very simple for STRC. And I don't know the tax situation in Taiwan. Hopefully you can get write-offs because it's for a medical reason for a family member. I'm not sure. But if you can borrow even not 2.3%, but even up to 5%, and say you've got taxes on your STRC, you can still make it work, and it's worth the risk. So I put together some examples that you could think about how much you need to borrow. For example, $100,000. If your cost of your mortgage, borrowing $100 against your apartment, is 2.3%, $2,300. Your annual income from that, from STRC, could be around 11%, bringing you in 11,000. So your net income could be 8,700. Now, I don't know how much that covers or how much you can borrow or what the numbers are, but I had a look online as to what different types of private care, extra medication, moderate care, emergency intensive care unit type care. The cost could range anywhere from $1,560 in Taiwan to $1,780 for the basic, $2,500 to $3,750 for medium with a lot of medication, and $4,700 to $7,800 a month for extreme and private care. So the answer is yes, you can do it. I don't know how much you need. I don't know how much you need to pull it for, but it could cover you. And again, make sure you look at your tax situation as well. And I hope your father gets well soon. So these are situations where, yes, not financial advice, would recommend doing that. Next one, it gets into the future. This is from Coding Monkey. And this had me thinking a lot over the weekend. Basically, it's been about 3 years since you predicted that AI would take over the world. With the newest release of Claude, this has been increasingly evident to me that you are correct. What gave you the confidence to make such a claim 3 years ago when AI was little more than a useful parlor trick? And where do you expect AI to go over the next 3 years? And this is from Coding Monkey, who is a software engineer. It's probably close to 100% of my code is written by AI at this point. It's not at the point where I can give it a well-defined spec and build a quality feature without me guiding it, but generally it's there. You see the future, etc. So thank you, Coding Monkey, for this. Let's talk about what I did see and why I was able to. And I spent a lot of time I spent a huge amount of my percentage of my day thinking about where we're going, what the future looks like, reading a lot, analyzing a lot of data, and putting breadcrumbs together. But first of all, when we look at what happened, we had record adoption for ChatGPT when it first launched. 100 million people started using it in 60 days. That never happened in the history of the world. It took TikTok 9 months for that type of viral stuff to spread. Instagram, 30 months to get to 100 million users. When something spreads like wildfire like this, I know a couple of things. One, it's real. Number two, it attracts a lot of money and capital, which takes you to my second thing. We saw the largest industrial spend, and it's not going to slow down. Obviously, with GPT-4, we had a nuclear arms race. We had all the big hyperscalers making huge plans to invest trillions in data centers, etc. And of course, capital surge, Oracle borrowing billions to, again, also do that. So that was the second element that I saw happening very fast. And the third, first-hand, real live AI use case in FSD across our vehicles here. That told me when they transitioned from version 11 to version 14, I've been a beta user. I've seen all the FSD versions from 7 or 8, I think. But when they moved to neural nets and learning from videos, that was a step change. And then I knew, okay, this is the biggest mini AGI application on the planet, especially now with sentient FSD. And that basically sealed it for me. Just to see the rate of change and the iteration of the progress was huge. Now, the most important part of your question is, what happens next? What do I think is coming for the next 3 years? And again, this may shock some people, but these are things that I think about all the time. First of all, I do believe in 2026, it's going to be a massive year of change. We're already seeing it. The first 20 days of this year have been nuts already. And we're already 20 days in. The markets, also nuts, not in a good way, but the developments have been huge. And I believe we're already in the singularity. I believe, well, call it a soft singularity where hyper-exponential growth feels smooth, but fundamentally our whole civilization is being rewritten at the same time. And I want to give a hat tip as well to Alex Visner-Gross for this, who basically said last year we're in the singularity. Also, the end of math, which is stunning. And this has bigger implications beyond mathematics, but I kind of like mathematics, so it's near and dear to my heart. But basically, AI can now solve math that humans can't. Okay, and this will lead to a domino effect, triggering huge discoveries, not just in math, but in physics, chemistry, biology, medicine, etc. This is all going to happen really, really fast. And again, per Alex's point previously, when you're in it, you don't see it. There's radical changes happening, but you don't even notice them because the world is moving so fast. It's like being on the surface of the planet that's spinning at a very fast pace. You don't feel it. It's probably a bad analogy, but bear with me. Then, other things, physical intelligence. We will see rapid deployment of humanoid robots and molecular manufacturing, which is huge. And economic hypergrowth, which, as Elon Musk said, shift toward triple-digit GDP growth. From Elon, I did the math behind this and created a video around it because I think it's fascinating. And I proved it can happen. It can happen. An idea of GDP growth. Build a car for 15K that generates 50K a year. That is explosive GDP growth. That's the easiest way to think about it. And then the good news, too, curing thousands of diseases, which would be messing. I read an article, a medical article this morning about solving arthritis with the cream out of Stanford. I'll do a post on that later on Patreon. And health is wealth and so much more. This is going to be great, but there will be an energy crunch. U.S. has to get real smart, and other nations around the world real smart around energy. They have to look at what the Chinese are doing. I'm not a member of the CCCP, but I do watch them very carefully, and they're making many correct moves and have been for the last 20 years. I wish the West would be as smart as the Chinese. Anyhow, that's what I see happening. It's going to be radical, but you won't even notice. In fact, there's a lot of people that just live their ordinary busy lives, and they're not even aware of the type of things that are happening. But I am obsessed with it, so I'll keep you updated. Next is from Gurpreet. I'm using your ATR model along with Retire On model, and my calculations show that a 20% CAGR in my portfolio would allow me to retire in about 7 years. I'm considering allocating 50% of my portfolio to Tesla as a long-term hold position, and the remaining 50% to active trading using your I-12 stocks with the ATR model on the daily time frame. What are your thoughts on this strategy? I believe the approach could realistically deliver well above 20% CAGR. Oops. And really appreciate everything you do and your knowledge. Thank you. So a couple of things regarding this, and I'm not throwing cold water on your strategy, but I am going to share a couple of what I call the 30,000-foot investing rules that are important to know. If you are new to trading, be very, very careful because active trading can kill your returns, okay? If you are active trading, make sure you have an edge, you have a process, you have a system, you have a model like ATR, and paper trade first and make sure you win 70 to 80% of the time. That will give you outperformance. The other thing that's important is time in the market beats timing in the market. So sometimes if you just hold an asset, like the example I love to give is like Costco and Home Depot for 30, 25, 35 years, whatever. That's all you need to do is just hold on to winners. Make sure, but keep an eye on them. Make sure have very few assets in your basket. I think Druckenmiller says this, and watch them very carefully because things can change. For example, between 2020 and today, Berkshire Hathaway underperformed the S&P 500. But the previous 40 years, they smoked it. Again, the last 20 years, 25 years, they sucked. But before that, they crushed it. So again, every asset change. Also have cash to buy dips. We could be getting a big dip next week. Hold quality assets and plan in 3 to 5 year macro trends. Just like the previous question regarding AI. You know something big is coming. Position yourself for it before all the other sheep figure it out. That's very important. Get in early, get in hard, as I say. Also, 20% CAGR, not very exciting. Here's the list of top stocks. Many of them I have owned or traded for a long time and heavily invested. In fact, Tesla, NVIDIA, still very big positions in those two. And the historic CAGR since their IPO, Tesla, leading CAGR in the history of the world, 48.53%. And I believe they're getting into something way bigger than cars. So that CAGR, as it explodes the GDP, could even be a lot higher than 48%. I did a video yesterday of what a 52% CAGR would mean for the future. It means the market cap goes to $100 trillion. Absolutely crazy to think about, but I'm glad you're talking in terms of CAGRs. NVIDIA, 40% CAGR. Crazy. Netflix, 35% CAGR. Microsoft, etc., etc. Now, so don't get too excited about 20%. I think 14% is your kind of baseline minimum. Everybody should be beating that, or else you're drowning out there. So that's kind of what I see. Do trade, have multiple assets, and think in terms of cycles. Remember the rules I just mentioned here. Write these down and play and trade around them. And play the long game, because you've got 7 years. So you'll have 2 or 3 cycles over the next 7 years to play with. Next question is from Dogs Wonder. With many retirement questions coming in, will you do an update on the retire-on model? The retire-on cocktail, I should say. Perhaps even comeback of retire-on cocktail. So this is, I do these retire-on cocktail videos when assets are cheap. I do not do them at all-time highs because I don't chase. Now, if we get a big crash, okay, a black swan, a gray swan, nice 20% dip, completely oversold great assets, you will see an updated retire-on cocktail, maybe even a new edition, but not when assets are all-time highs. And the reason behind this is be patient, store cash, and be ready to buy dips. 2026, it will have a huge change, but also big volatility. No doubt about that. Be ready. Next from Boris J. The PE of Tesla is around 300 at the moment. If I understand it right, you pay $300 for $1 of earned dollars. That shows people believe already in massive growth, and they have priced in upcoming things like Optimus in, right? Do you think the value goes down over time, like the NAV premium of MicroStrategy? So PE ratio is great for kind of stagnant, staid stocks, think utilities, telcos, that type of stuff. But for something that's on the cusp of 14 different lines of massive disruption, it doesn't really work very well. And remember, shout out to AJ2, he talks about how the PE for Tesla was always high. It's not a bug, it's the model. The stock permanently trades at a massive premium. A lot of people call it the Elon premium. Okay, so if we look here, according to his forecast, he expects as even earnings start exploding in 2026 and 2027, the market will overshoot to the upside. And we're going to see a price target here of within 24 months, maybe up to $1,190 a share, which from where we are now is 3x. Now, we always have that massive Elon premium because they're at the center of the biggest disruption and the largest TAMs on the planet. Autonomy, robotics, etc. This is why we play this game. It's huge. And we're entering a very special window. The next 12 to 24 months will be nuts. So if you see a nasty dip on Tesla, buy it. Not financial advice. He reckons, AJ reckons 540 to 600 in the next 12 months. Maybe 650, I think, if robotaxi really starts to scale. And next 24 months, 1,000, 1,100 to 1,190. Again, one important lesson here too is if you base your investing on PEs and you are in disruption, you will lose. It's that simple. And there are so-called experts out there that do this. I consider myself a disruption value investor. I like to play where the puck is going to be. I like disruption stocks, but I don't like to pay a lot for them. And that's how you get crazy ROIs. Next question from Tiberius. Is the Model Y worth it even without FSD? I'll go through this real quick because you should know all about this already. Industry-leading safety standards. You can drive this car off a 300-foot cliff or a 1,000-foot cliff, land on rocks, and the 4 passengers can walk away. It's incredibly safe. It's the highest safety ratings, structural integrity, etc. It also has advanced self-driving. Over the last 2 months, 3 people close to me have been hit by other cars. 3 people. T-boned. 2 were T-bones. 1 was a hit and run where projectiles left the back of a pickup truck and went through his car. If he was sitting in the car, he could have been killed. This is crazy. Not saying that FSD or whatever would have prevented the hit and run, but the point is it will definitely prevent being hit by people running a red through a traffic light. And then you get the over-the-air updates and elite assisted driving, not FSD. This is stuff you get without buying the FSD. Also, unmatched value, best bang for the buck, model-wise about 41K before extras or getting the long range, etc. No costs, super cheap to run, very fast, 0 to 63 seconds, supercharger network. You can add 250 miles of distance in 20 minutes for less than $20. Less than 20 minutes for less than $20. And very big storage. You can fit 7 people in the new one. And it's the efficiency leader of going far. And it's also the best-selling car in the world without FSD, because most countries don't even have FSD yet. But that's all going to change in 2026. Best-selling car on the planet in 2023. Best-selling car on the planet in 2024. Best-selling car on the planet in 2025. And remember, they sold over 3.4 million Model Ys in the last 36 months, making over 150 billion in revenue. That means one Model Y is selling every 25 seconds on average. Okay? And it's not a traditional car. It's a battery electric vehicle. And it has the rest of the car making world scratching his heads. And it drives itself. Crazy world we live in. Next question is mean reversionist. I like the name. You said in the past you'd be a different animal if you're primarily in a tax-free environment. Can you explain how you might trade differently? If that situation of taxes were not a factor, would you still focus on options, etc., etc.? What might you do? So I would day trade. I wouldn't make videos. I sit at home trading all the time. I have a number of ways of making money during the day, from the start of the day to the middle of the day to the end of the day. I would still use leaps for large exposure disruption, but sell calls very actively against them. And I would also focus on different new creative ways to compound stuff faster, even like salami slicing multiple times per day, pulling $1 out of an asset across 10,000 shares. You know, you could do that all day long and just make it into a sport thing. But I would stress, though, things like day trading and very active trading is extremely stressful, and it can play into your health. We'll get to that at the very last question today as well. But yeah, I'd be a hyperactive trader. But I must say as well, sometimes having the short-term capital gains, very high tax rate for me, that makes me less active, which also can actually save you from playing and over trading too much, which can also destroy your returns. So it actually is a double-edged sword. One can be very beneficial. Next, Christopher K. I'm looking at AI-driven drug discovery, long-term monster stock theme. I keep coming back to recursion, RXRX, and ABCL. My view is that ABCL looks like picks and shovels, AI plus wet lab plus royalty, with lower binary risk and durable compounding, while RXRX feels like a full-stack moonshot with a much higher ceiling. If AI-first drug discovery works at scale, but with more execution and burn risk, curious what you think the platform's models would look like. ABCL ultimately capture the most durable value in AI biology, or if vertically integrated players like RXRX have the better chance of becoming generational winners, and whether this is a hold both sized asymmetrically situation in your view. So first of all, there is nothing riskier than drug biotech companies. Second of all, I do not like companies that do not make money. So first thing I always do is look at the financials, and then I look at the chart. And remember, some of these companies have been around way before AI, so they're not AI drug companies. They were something before. And a lot of players, they pivot to say, oh, now we're AI, so they can get a more of a premium on what they do. Let's look at the financials. This is RXRX financials. Horrific. Absolutely horrific. First rule of investing, don't lose money. I wouldn't touch this with a 40-foot pole. Unless, of course, they were on the cusp of curing cancer. Then perhaps. Or globally taking over all pharmacies. Who knows? This chart tells you all you need to know too. On the ATR model, it's a complete zombie. It's down and to the right. Boom, dead. ABCL, same. Loses a ton of money. Growth is all over the place. You know, they're losing a ton of money. It's that simple. And also, on the ATR model, ABCL is a zombie, down and to the right. So, don't touch them. Now, HIMS, if you are looking for a play that is a combo of RX with some medical, pharma, biotech capability, I think HIMS is a very interesting disruption player. We've covered it before. And if you look at their growth, it's pretty stunning. And they're profitable. Again, first rule of investing, don't lose money. These guys are growing like a weed and they're making a profit. Very nice. Let's check out the chart. And this guy, thank you for this question because it made me dig into HIMS. HIMS is rapidly approaching layer 2 on the ATR. It means down from layer 6, down from about $80, down to, what's that number there? About $28. $28, not financial advice, would be a nice place to start a building position if you like this space. If you want to play AI drug discovery, just look at the big players like Eli Lilly, Merck, Sandoz. That's kind of the players I would look at too. But I prefer bigger TAMs, bigger disruption, and beware of the others. Thanks for the question. Next one is Sam Jane May. Hi, James. Thank you for your tireless work and your commitment. I've been a Patreon member and iSuite subscriber for over a year. My knowledge and ability to invest has developed immeasurably. In recent months, I have become increasingly aware of how important my routine across multiple domains, health and wellness, mental and emotional readiness, technical skills, research analysis, trading, rest and recovery, etc., is to being a successful investor. Can you please provide some insight into your personal daily routine that supports your success as an investor and educator? I am personally interested to understand this pre, during, and post-market and how it may vary from day to day. So, remember, I'm a little bit different, and I do this because I love it. And I asked AI to do a little bit of a graphic to give you an idea. But first of all, big picture, I have the same schedule every single day. Eat at the same time, get up at the same time, go to bed at the same time, etc. 7 days a week. I treat each day the same. We'll get into the reason for that in a minute. I like to be up before 6 a.m. I do watch the markets through the night too. I check in around midnight and 3 a.m. as well, unless I'm still up at midnight. And I stay very, very active. So in 2025, I actually calculated all the posts I made across all the different channels, platforms, my platforms, 35,000 posts. So I'm making 100 posts a day. But I like to stay active. So that's just me. So get up early, hydrate first, then drink a lot of coffee all day, work from 6 a.m. onwards. At around 10:30, I go for a run or a walk. I do a lot of research in the morning before the 10:30 walk. It takes about 45 minutes or a run. And then I know what the story will be today, work with the team, etc. I look at everything. We're talking markets, macro, Bitcoin, equities, disruption, AI news, political news, anything that can impact the markets. I look and I'm thinking, reading, modeling, connecting the dots across everything. Eat first at around noon or after my stream, which is either about 1 o'clock every day. And then after the video, more research at around 4 o'clock. Go out again, another walk for half an hour. Eat at 6 o'clock every day, second meal, and then go back to work. So that's pretty much it. Light decompression, very, very fixed schedule. But it's important that how I treat each day the same, kind of like the way I wear the same shirt. I've got 7 or 8 of these different shirts. Also the same. Everything is very simple. Now, why? Why do I have a very strict schedule? Well, there's a whole bunch of very interesting studies. There was a thing called the Dunedin study, The Power of Self-Control. It was a 40-year study that tracked children from childhood and looked at their levels of discipline and how those kids that were disciplined growing up had extremely much more successful outcomes in life because they were disciplined. Again, high discipline was the single strongest predictor of better physical health, financial wealth, lower rates of abuse, etc., etc. And it also brings you what they call the calm factor. Okay, with your regimented habits, you've got greater emotional resilience. You can handle high stress situations like the markets. You've got no internal alarm system. You're never overwhelmed because you know what's going to happen every single day. Also, the biology of routine is very important with cortisol management. I admittedly am a bad sleeper, but I'm trying to work on that, but it's very hard. But having that routine is very good for your biology. Your predictability is a buffer, and it helps set your cortisol clock as well, which also gives you lower anxiety. Nothing rattles me. I've been through everything before. And the other thing as well, third leg of the stool, is very strict nutritional discipline. Eat well, eat healthy, eat clean. And that's very important for the gut-brain axis too. So, probably too much information. I do want to mention as well, rule number 14 of our 100 rules, very important. Do not trade when impaired. Do not trade when you're tired or when you're sick or exhausted or unwell or worried about family matters or anything like that. You will screw up. Only invest if when your head is in the game 100%. If you're off, your results will be very off. So, and that can lead to deadly costly mistakes that can destroy everything. So remember, head in the game, stay real stable, real balanced, absolutely critical. And this week, helping animals, where we donated to Amigo de los Animales in Puerto Rico to help support to bridge their gap between abandoned dogs and loving homes. And it's been a big success so far. So big shout out to Rob as well on that one. And tomorrow, TCA Live, as usual, I will send out a place where you can post your questions. And let's do some live questions right now from everybody. I'm going to turn myself up full so you can see I'm alive. Anyway, let's get into it. And a big thank you to the team behind me. And I hope they don't hate working on Sundays. They're probably used to it by now. Happy feet. Up there in Canada, I hope it's not too cold. I heard they had record low temperatures in Toronto over the weekend, minus 50 Celsius. Stay warm, my friends. Thank you for honesty and always being there. Our family will forever be grateful to you and the team, and for Rob's Animals. Yes, to Rob's Animals. Thank you so much. From Nick, is real estate as investment versus holding dollars a good strategy at this time if Bitcoin and Tesla retire bags are packed? Well, everybody needs a castle. It's very important to have one. You can make multi-unit properties work and generate cash flow, but they are a lot of work. I used to say before, things like property taxes got very expensive and utilities got very expensive and everything else. It can be a great side income, side hustle, but it is a lot of work. Now, you can get great deals in real estate if you know when to buy at the right time. If you buy distressed properties, the way you make money in real estate is you solve other people's problems. And also there are times that you can buy stuff. For example, now mortgage rates are high, but they're coming down pretty fast. The 30-year mortgage rate in the US is about 6.1%. It was above 7. As the rates come down over the next year plus, that means the property prices will rise. So if you can get in now, grab something, finance it expensive for a year, but then it should be worth a lot more as the rates come down in the future. So it's always good to have, but it's also a lot of work, but it's also fun. Real estate projects are fun. So balance all that as well. But what I would probably do, if you just built your bags and you don't have excess wiggle room, I would stay probably invested in the market for now and then start pulling profits from your investments out in 3 years, 4 years. I think there'll be a lot of change in the macro of the planet, and I think you'll be able to buy a lot more real estate in 3 or 4 years than you can today. But real estate, of course, will go up because the dollar is debasing. That's why everything should go up. But anyway, long-winded question, Canada, up there, Nick in Canada. And I know Canadian, like Vancouver, is through the roof, so I wouldn't buy a condo in Vancouver, not at all, or Toronto for that matter. Mary Mulder. Based on Tesla compelling opportunity, reasons not to keep stacking for existing bag holders, even above 400. Oh yeah, you keep stacking. You know my bogey number for Tesla from Patreon. So yeah, this, you know, if you want to really maximize ROI, then you can get very chintzy on your actual limit orders. Like try get as low, close to 400 as possible. But at 440, 450, 430, 420, 460, because we know where it's going, it doesn't really matter a lot at the end of the day, but you got to get to your position. And then when you have your retire position, then you can ease off the gas and wait for black swans. And then always have some cash handy. I can't stress that enough. Having cash to buy dips is golden. And that's a big part of how I play the game. And thank you for your super sticker as well. Mostly harmless. Good to see you here, buddy. Sir Winston, Martello, Cern Dragon, Forest, Dog One, Sconed, Buckhorn, DBF, Talker, Signal 103, and IQE Labs. And a big thank you as well to Sean D, T&D, and everybody else here in the group. I appreciate you all. Have a great weekend. See you tomorrow morning. I don't even want to look at the Bitcoin price. I'll probably do depressing. Well, here I go. Glutton for punishment. What's it doing? Let's see from metals. Probably. I think Bitcoin will hit 5,000 tomorrow. No, not Bitcoin. Sorry, gold will hit 5,000 tomorrow. Bitcoin's down 2,500, but it's off the bottom as usual. Sunday afternoon manipulation. Thanks all. See you tomorrow. Have a good night. Bye bye.